Hi, I'm Mike Coe. The coverage of the Winter Olympics in Beijing by CNBC is finally over with the conclusion of the Olympics this past weekend, which means that fast money and options action are returning to their regularly scheduled slots. Nevertheless, with all of the activity that we saw in the market today, it seemed like it made some sense to provide a web extra anyway. Right now, Russia's aggression towards Ukraine put a lot of pressure on stocks. One of the things we definitely saw was an uptick in volatility. We saw the VIX rise by 1 point to about 29%. Of course, it's coming from an already relatively elevated area. That's in line with what we would expect for the 1% decline or so that we saw in the S&P. And taking a look at some of the notable options activity that we saw, unsurprisingly, RSX, which is the ETF that tracks the Russian stocks, saw a tremendous amount of activity, well above average options volume. This is an ETF that right now saw the 52-week lows get hit. It saw a 52-week high in terms of implied volatility, and it is short sale restricted. One of the trades that we saw was a purchase of 3,000 of the March 19 puts. The buyer of those puts was paying about $1.25 per contract. Now, of course, those are about $2 out of the money, so that would require at least another 10% decline or so just for those to get into the money, and an even bigger decline than that for these to be profitable. But given the downward moves we've seen and given what's going on, it's probably not surprising. Another area of the market that saw considerable weakness was the consumer discretionary sector. And there's an ETF that tracks that as well, XLY. So the biggest constituent stocks that were having a hard time in the consumer discretionary sector were the autos. We also saw a lot of pressure in the durables goods sector. And perhaps unsurprisingly, we also saw what is probably a very large hedge trade, a purchase of 30,000 of the April 140, 130, 120 put butterflies. They spent just under $1.30 to buy 30,000 of the April 140 puts and then sold 60,000 of the 130 puts against it, and then finally finishing off the final leg of that butterfly by purchasing the 120s. Now, net, they're spending actually a relatively small portion of the distance between the strikes. That would be one of the reasons to use a strategy like this. Of course, if you hold a strategy like this all the way to expiration, you're only going to see profits as long as it is between that 140 and 120 put strikes by at least the amount that you spent. And of course, the peak profits would be if it hit right on that 130. Now, that's trying to thread the needle a little bit, but I would point out that if we do see XLY decline by any decent amount in between now and April, it's likely that the value of this butterfly would appreciate. Now, not everything was so grim. We did see some positive flows in Macy's. So Macy's recently reported earnings. They actually reported an earnings surprise. They reported about $2.44 a share. That was versus street estimates, at least according to FactSet, of about $2.01 a share. We saw an increase in the quarterly revenues year over year of about $1.9 billion, and digital sales rose about 12%. They also announced that they were initiating a new $2 billion share repurchase program. The stock actually pre-market had rallied quite considerably. And then on today's weakness, generally, we did see the stock close lower. But overall, it did outperform retailers, which were weak generally. One other quick point is that JANA Partners, the activist investor, had been encouraging management to spin off their e-commerce business. The management of the company has basically decided that they think that it's better for Macy's to remain intact. One of the activities that we saw here was a big purchase of the March 29 calls. Those were trading for about $1.30. Buyers of those calls, obviously betting that the stock could continue to rally. Another name that saw actually some interesting activity was Roku. Now, Roku also announced earnings, and it fell very sharply after it did so last week. It actually fell peak to trough about 30%. Now, today it was one of the market's best performance. It has actually regained about half of the losses that it had recently seen as a result of those disappointing earnings. And I think one of the things that we saw in the options market was probably anybody who was trying to buy the stock yesterday on the bounce or the last trading day, I should say, on the bounce. Now they're looking for an opportunity, I think, to hedge, because we saw some big purchases of the Feb 120 puts for $4.10. Given the fact that the stock rallied more than $9 today, had they bought the shares on those lows, they can essentially hedge that downside, as expensive as those puts are, for about half of what they gained in just one day over the next. Now, one of the things I would also quickly point out here is that this is a very high valuation, very high growth, but that growth is expected to slow. So we were looking at, year-on-year revenue growth of over 50% historically. Between 2023 and 2024, I think the street's now looking for a pace of revenue growth a little bit closer to 30%. And some people may have thought that Roku would be an interesting acquisition target. The problem is that the valuation, I think, at these levels and also in this market environment probably make that a bit unlikely. So hopefully we'll have an opportunity to continue bringing you some of these web extras, which I will continue to do, and hopefully my colleague Carter Worth will be able to provide us some charts in the future as we go ahead and do that. Please, if you like this kind of content, subscribe, hit the notification bell, and if we see enough interest, we might be able to make this a regular course of programming. Thanks for watching.
If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Co, or go to our website, www.openinterest.pro. Thanks for watching.